2016 is almost in the books, and what a year it was. Conventional wisdom was turned on its head, both politically and economically. Even the stock market was turned upside down and inside out. It was the worst start to a year ever, only to end up with a string of record highs. And that wasn't all. Here's your 2016 year in review.
Naughty or nice, it was mid-December by the time we got the year's first and only interest rate hike.
We expect the economy will continue to perform well.
But will it? 2016 quickly became the year to expect the unexpected.
We're going to win Florida.
Oil prices hitting 13-year lows in February, below $27 a barrel. Recession fears flying, the stock market tanking. But almost as quickly as they dropped, stocks turned sharply upwards in February. Go figure. A Brexit vote? Terror attacks? Nothing kept stocks down for long. Perhaps the biggest shadow cast on election night in the United States.
Here are the raw numbers for you. Implied open lower of 776 points on the Dow.
Not a day later, surprise, a rally. New highs almost daily for weeks. And there were more surprises. Apple fighting a court order to help the FBI unearth data inside a locked iPhone belonging to one of the San Bernardino terror suspects. The move set off a global debate, privacy advocates versus law enforcement. Samsung discontinuing sales of its Galaxy Note 7 when batteries overheated, some catching fire, others exploding. Samsung's estimated losses, $17 billion. Among the headline-making mergers announced but not yet completed, AT&T's deal to buy Time Warner for more than $85 billion, Bayer buying Monsanto for about $66 billion, and British American Tobacco buying R.J. Reynolds for about $47 billion. And it's not only politicians failing when it comes to gaining the public's trust. Volkswagen paying out more than $15 billion, the largest auto settlement ever made to U.S. consumers, to settle actions tied to its emissions deception case. Politicians, though, turned the heat on drug companies like Mylan, asking how the cost of its EpiPen could jump more than 500%. And banks just keep on misbehaving. Wells Fargo, for instance, opening more than 2 million bank and credit card accounts without customer approval.
You went on television to blame thousands of $12 an hour employees who were just trying to meet cross-sell quotas that made you rich. You should resign. You should give back the money that you took while this scam was going on, and you should be criminally investigated.
CEO John Stumpf is gone. Wells Fargo fined more than a dozen times in recent years. Total cost, more than $10 billion. Other CEOs are moving on next year under better circumstances. Muhtar Kent at Coca-Cola, Howard Schultz at Starbucks, and Rex Tillerson at ExxonMobil, who will soon be telling Congress why he should be the next U.S. Secretary of State.
We're operating under a cloud of uncertainty at the moment.
Cloudy because the road ahead is marked by divergent paths. The U.S. is raising interest rates while the rest of the world is not. U.S. unemployment stands at a multi-year low, but participation rates are still down too. High-tech, artificial intelligence, robots, and driverless cars increase efficiency, but stand ready to claim more jobs. Wage growth is a little better. U.S. consumers appear to be buying, but if 2016 tells us nothing else, it's not to take anything for granted.